On today's show, we will conclude our three-part series on navigating life after the loss of a spouse. We're also going to address the traditional advice of don't make any major financial decisions in the first 12 months after losing a spouse. Is this good advice or not? Welcome to another episode of the Simply Retirement Podcast, where we want to empower and educate women to live your retirement on your terms. I'm your host, Eric Blake, practicing retirement planner with over 25 years of experience, founder of Blake Wealth Management. And I would not be the man I am today without the women in my life. Over the last two episodes in Navigating Life After Loss, we talked about the immediate to-dos after the death of a spouse, what to focus on also within the first couple of months. Today, we're going to talk about that first full year when you start to see some of that fog start to lift and life starts, of course, to feel very different. But there are some decisions that become more urgent while there's others that can wait. And the challenge, of course, is knowing what the difference is. Joining me once again is Wendy McConnell. Wendy, how are you?
I'm good. How you doing?
I am good. So real quick, I announced last week that we brought my daughter on to join the team. And of course, this week means she's training. She's getting a handle on all the technology and getting her computer set up.
Okay.
My wife doing all the stuff that my wife typically does, which means I don't know how to do it. Which means if they're working together, guess who's responsible for grandbaby?
See, and you thought you were going to have a break.
No, but it's been fun. It's been awesome. She loves being outside, which is a good thing. So we take long walks. We play outside. We got this little splash pad we set up on the driveway for her. So she's able to keep herself pretty busy. So we're all good.
Hey, I want to take a dive in that splash pad. That sounds fun.
It's not very big. It's big enough for an 18-month-old. That's about it, though.
Bummer. All right, next time.
But she has a good time with it. So before we dive into today's main topic, I wanted to revisit the conversation we had on Social Security that we touched on the last episode, because I'm not sure how clear I made that. So what happens if the spouse passes away and they're receiving Social Security benefits? What happens in that first month or two? So I thought it'd make it hopefully as clear as mud here with this. So the bottom line is what you want to know is that if the spouse lived the entire month, they are due a Social Security benefit the following month. Again, Social Security pays in arrears. So we're recording this in early August. So if the spouse lives the entire month of August, they are due a Social Security benefit payment in September. However, if they were to pass away in the month of August, they would not.
Okay.
They would not get a payment in September. Now, the tricky part is, in many cases, the banks will return that payment no matter what, whether they were due the payment or not. So that's where some of the confusion comes in. But if they live the entire month and they receive the payment in the following month, you'll get to keep it. However, if the bank withdraws it, because again, they're worried about fraud and all those kind of things, that's where that form 1724 would come in, the SSA form 1724, where you would apply either to have the estate or the surviving spouse have that payment returned to them.
Okay.
Is that clear?
Yes.
So basically it's did they live the entire month or did they not? That will determine whether they should receive a payment in the following month. And hopefully that's as clear as I can make it at this point.
Yeah. Well, it's tough. I understand.
Okay, so now I wanted to talk about, obviously there's, once you get past this and some of the initial paperwork, some of those decisions that have to be made relatively quickly, the rest of the year is often where some of these bigger questions emerge, what things are going to look like ongoing. Obviously, there's kind of a sense of settling. There's still going to be that emotional piece of it that's going to be involved. But this is when, again, you got to start thinking about the long-term planning that comes in. And it'll start to take shape there. And we want to talk about how to navigate that, hopefully as clearly and confidently as reasonably possible. And again, that's where I wanted to talk about this advice that you hear quite frequently, which is don't make any major financial decisions in the first 12 months.
Right.
But here's the way I would try to think about it as best you can. I know how difficult it is because we've unfortunately gone through this in a number of situations with clients recently. But really, it should be try to avoid emotional decisions in that first 12 months.
Okay.
And that doesn't mean you should do nothing. In fact, there's just going to be some things that can't wait. So we know that grief can cloud your judgment. It can be extremely difficult to separate emotions from choices in that first year. So ideally, we want to just pause, evaluate your options as logically as reasonably possible. But I think this is also where getting trusted advice can make a huge difference.
Okay.
And here's the way I think about this is in most cases, and this is through my experience over the last 25 years of being in this business, what's interesting is that it's the planning that was done before death that impacts those decisions in that first week, in that first month.
Right.
That's what we're talking about. Did we have a will? Did we have our estate plan in place? Did we have the right beneficiary designations and ownership on our retirement accounts and on our investment accounts? Did we have life insurance? Was it titled correctly? All those are decisions that have to be made prior to death to make life as smooth as reasonably possible. And then it's the planning after death. Obviously, that's just as important, but that's where that first year, that's where the planning really comes into play. When we start thinking about questions like, what should my beneficiaries designations look like now? Who should they be? Who's going to serve as my executor now that my husband or spouse has passed? Who are my trustees going forward? What are my income sources going to be? And what's the most tax efficient way to utilize those income sources? Should I apply for Social Security benefits? And if so, when? Should I stay in my home, downsize, rent? What should I do as far as my living arrangement? So that's where those first year questions start to come into play, is that planning after death. But that planning before death, that's what makes that first week or first month extremely difficult, or at least somewhat manageable, is what planning was done prior to that. Does that make sense?
Yeah, absolutely.
So as we start looking at some of these different variables we want to think about, here's one that is so critical, but most people don't realize how critical it is. And that is tax filing status.
Right.
So when you think about in the calendar year that your spouse passes away, you are still able to file married filing jointly. But in the following year, unless you have dependent children, you're going to be filing as single, most likely. Again, there are certain circumstances where that might be different, but for the most part, that's going to be pretty much rule of thumb. And again, it may not seem like a big deal, but it can dramatically affect your tax situation, especially if it's possible that you might find yourself in a higher tax bracket in the future with fewer deductions, even if your income may drop a little bit. And we talked about that in episode 66 when we talked about the widow's penalty and what the implications are there. So in that first year, and again, it's always dependent on when the spouse passes. Unfortunately, you get that always come into play, right? Did they pass away early in the year where you gives you a little more time to think through these things, or later in the year? I shared a story a couple episodes ago, I believe it was, on you had a client, he passed away in December and there just wasn't any opportunity to do anything. And it's not something you can force or that you can push through in any way. But this is where you might think about things like Roth IRA conversions. If you think you're going to be in a higher income bracket or have higher income for whatever reason in the future, should I start converting some of that taxable money into tax-free money?
Okay.
Capital gain harvesting, meaning, okay, if I've got some highly appreciated stock or mutual funds or whatever it might be, should I think about selling some of that this year? And some of these may be related to your liquidity needs, but again, also I'm talking here just from the tax standpoint. Because if the tax brackets are higher because you're filing married, your tax ranges are higher because you're filing married jointly versus what they would be when you file single in the following year, that's really what we're talking about, is can I recognize some income at these lower brackets versus what I think I might be in the future.
Okay.
And even this year, like 2025, we've now have the new over age 65, $6,000 deduction. If your spouse passes away in 2025, you might actually get a total of $12,000 in deductions between the two if both spouses are over 25.
Yeah, if you're over 65 in the
yeah.
year 2025.
Right.
Yes.
So if you're 65, if both spouses are 65 or older in 2025, you may get a total of $12,000 in deductions. Whereas in 2026, you're going to probably lose one of those. And again, depending on your income situation, if your income is too high, you might lose them altogether. And that's, again, a very reasonable, and it's a very possible circumstance, right? I think for a lot of people.
Understood.
There are also even some cases where it may make sense to incur a higher one-time tax bill in that year of death in order to reduce tax burdens for future years, where you might say, I might do a really big Roth conversion in the year of death in 2025 to avoid having higher required distributions in the future or being taxed at a higher rate. And so that's really where, again, the planning becomes so critical, and why working with a tax-savvy retirement advisor becomes so important, especially if those decisions might have to be made relatively quickly before year end.
Yeah, I mean, and that's important to point out because, I certainly wouldn't know if it would be beneficial for me to pay more this year so that I can pay less in the future. I mean, so yeah, keep that in mind.
Well, and the confusion comes because you don't really even think about that. Why would I start thinking about 2026 and if my spouse passes away this year, am I really thinking about what my tax situation is going to be in 2026 and 2027? Most of the time you're not, but it's, again, depending on the circumstances, that's where it is such a critical window of time that you have available to you to make some big decisions. And trying to go through that while you're still on the emotional roller coaster of losing a spouse, it's just so challenging. You understand why it doesn't happen. You just hope that you have people on your side that can help you navigate those decisions going forward.
Exactly.
So then we start talking about rebuilding your financial foundation. And again, that's kind of once we get some of that urgent tax planning type stuff out of the way, and then you start to rebuild your longer term financial future. This is where we start talking about reviewing your income plan, updating your withdrawal strategies, if consolidating financial accounts. If your spouse had an IRA and you've got an IRA, do you need to consolidate those into a single IRA? Depending again on your income needs and your tax situation. Again, you want to start updating ownership and beneficiaries on your accounts and your life insurance policies. You also want to reassess your own investment allocation and risk level. Depending on who is handling some of those, or who might be the key factor in those decisions on how you are investing your money, you might be much more conservative or even more aggressive. So what changes should you make to your own investment strategy as well going forward? You want to think about, what you're establishing and rebuilding your own credit, depending on those circumstances. If a lot of the stuff was in your spouse's name, you might not have a credit score, or you might need to rebuild build your credit score up and things like that. You just don't think about especially as you start thinking about housing decisions where that might come into play. But it's where you want to start defining your specific goals, and whether that means you want to travel, you want to downsize your home, you want to support family, you got to adjust your retirement timeline depending on where you're at, how old you are, and whether you are retired or not. You got to start factoring in when, and am I going to be able to retire? When would that be? So those are some of the decisions you want to start making as well.
Yep.
And we touched on the last episode, we talked about filing for survivor benefits, but I think it's also actually critical to talk about it here as well when you're talking about if you're eligible for survivor Social Security benefits. When should I think about starting those? And again, I'm not going to spend a whole lot of time here because we did talk about them a lot in the last episode, but just knowing what your eligibility, what your amounts are that you could be eligible for, and start thinking about when is the right time to file for those benefits. And again, as I referenced in the last episode as well, go back and take a look at it, or listen to episode 37, top 5 questions on Social Security survivor benefits. And that'll give you a lot more direction, a lot more insight as to what your options may be there.
Mm-hmm.
And of course, a big one is going to be evaluating your house and your lifestyle, your long-term goals. Where you live and how is going to be one of the biggest financial and emotional decisions you're going to face going forward. You got to start thinking about whether your current home is affordable. Is it manageable? And is there an emotional connection that you want to keep? There's nothing wrong with staying, of course, but if it's too big, it's too costly, or it's just filled with painful reminders and memories, and you might just think about, hey, I just got to move. And we talked about this a lot in episode 60, where we talked about should you downsize or rent in retirement. But a lot of that was around we touched on the financial aspects of that decision, but we also talked about a lot of the emotional and the lifestyle aspects of that decision about, do I want to travel more? Do I want to live near an airport because I do want to travel? Or do I need to be close to family?
Okay.
What I want life to look like going forward? And again, you're probably not going to have it all figured out in that first year, but the wheels will start spinning. You'll start kind of having these thoughts about, well, I got to start, when I start to move on, what do I want my life to look like? And actually, grief is going to be there. You're never going to be the same. There's always going to be something missing. But as you start putting those pieces together, thinking about, what do I want to do? How do I want to support myself? How do I want to support my family? How do I want to support my community?
Yeah, and it's interesting. Things can change over time, too. I had a neighbor who lost her husband suddenly, and we were all nervous. We're like, are you going to move? And she's like, no, this was our dream home. I'm going to stay here. And, within 2 years or so, she was too far from her kids, and she just didn't have a lot to do. And she just decided, I just need to be closer to my kids. So, after about 2-3 years, she decided to go ahead and move. So things change, too. So always keep that in mind.
Well, and that's where that 12-month window is it's just a time that is thrown out there.
Right.
There's no significance behind it other than, again, the ideally not making emotional decisions within that 12 months. Because you think about her situation of, well, if she just say, okay, I'm pulling the trigger 6 months in, she might have regretted it at that time.
Exactly.
But as she gave herself time to digest things and just kind of get her wits about her, probably most likely, it's just, hey, okay, this is just not the situation I want to be in. And you never know what those emotional components are going to be, because it could vary between, I want to stay here because this is where we raised our kids. This is where our life was spent together here. I want to stay, to everything I see reminds me of him, and I just can't handle that. I can't handle it from an emotional perspective. you never know you're never going to know, as many times as I've seen this, you never know which direction people are going to go. Might have an idea, but there's many times the individual just goes completely against what you thought they might do,
Yeah.
because you just don't know you don't know what the emotional response is going to be. And you see it on both ends of the spectrum. Again, those are some of the big pieces. There's some things that when you start looking at your own situation, that may be important. So these are just some, I would call it customizing your own life and your legacy. Once you've kind of gone into the planning phase and rebuilt your financial plan as to what that might look like, there are a lot of these little smaller personal, emotional, I call them administrative tasks as well, that might surface during that first year. And I just wanted to touch on a few of those. So things like contacting religious or community organizations for support. Again, that's a part of where that community, what community you want to be in, what kind of support do you need going forward? Because again, it vary based on each individual situation, whether those first 12 to 18 months you're kind of able to move on emotionally, or if it's many years down the road, what support do you have behind you, and what is that going to look like? Some of these other smaller details, even like updating your address, for having mail forwarded, depending on whether you do decide to move or not. Prescriptions. This is one that a lot of gets overlooked as well. If you had recurring prescriptions, your pharmacy, those types of things that people don't think about as well. Retitling assets, valuables, collectibles, those become, again, there's an emotional component to that, but how do you need to handle those? So we've talked about some of these in the past episodes, but safe deposit box, any accounts that were in your spouse's name, again, working through getting those taken care of. Again, that's a lot of where the titling, that pre-planning, whether it was done or was not done, comes into play. Again, I've shared this on a couple of parts of this episode of the husband that had a few different investment accounts that were just in his name with no beneficiary designation. Again, fortunately, they had the estate plan. They had done their wills. They had gotten all that in place. So that process was much easier for her to get those accounts moved into her name, which again, just using some of these concepts we've just talked about, she was then able to use the money to pay off her mortgage, which for her, from a cash flow perspective, was huge.
Yeah, but isn't like the beneficiary like a required field at this point? Like, can you even set these things up with getting away with not designating one beneficiary?
The key is, what was the source of the money? So for him, this basically, so he's been in the tech world, so Hewlett Packard and all the variations of that. So what this was multiple accounts with different stock accounts from these different employers that he had. Okay. Some of which had been sold and were turned into something else. So they weren't IRAs.
I gotcha.
So that's where, again, all depends on the source of the funds and what type of account it is. Are they IRAs or Roth IRAs, or are they just brokerage accounts? Which for him, that's what these were. There were, I think, 4 different ones. Again, all the same kind of stuff. A lot of the same stocks were in the same account, just because they had, his transition to different employers, he just held on to them. But they were stock accounts where he like stock purchase plans.
So don't take for granted that that's not an issue for you. Just the estate plan is what really saved the day that time.
Exactly. Absolutely. Because again, depending on the asset, could he have put a transfer on death on him? Possibly. But again, that's one of the things you just don't do. So again, fortunately enough, they were able to get their wills done, get their estate plan taken care of. So the probate process of getting all that sorted out was relatively easy for her. And we were able to walk through that with her, so that, again, by the time we get everything moved around, got it situated the way where it needed to be in her name, now we could have that conversation about, okay, do we think about paying off that mortgage? And for her, it ended up being that was the appropriate move, because from a cash flow perspective, it would have been really difficult to maintain her daily expenses and just her ongoing lifestyle and try to be continuing to make that mortgage payment. And it just wasn't.
Right. Okay.
It would have she probably could have done it, but it would have made things a lot more stressful, I think, from a financial perspective.
And you don't want that at this time, for sure.
Exactly. And because again, we talked about that as well. When there's financial burdens that are all part of this, that makes the feeling of not only the emotions of losing your spouse, but now you've got maybe anger creeping in, or doubt or worry, all these other things just kind of combining into this perfect storm of, I just don't know what to do. I don't know where to go. I don't know who to turn to. And so that's really that difficult part. Again, we talk about that pre-planning of making life easier, and that first week and the first month happens before death. These things we're talking about are more of those things that happen after in your plan going forward. What's the rest of my life going to look like?
Got it.
Some things like travel documents or emergency contacts. We always have these emergency contacts we have to fill out, depending on what's going on, if we're taking a trip or whatever we're doing. making sure you're updating those. Who is that going to be now? Is it going to be, a child now, an adult child that's going to take that role? Who does that need to be? Again, we've touched on making sure you update your own estate plan, your own beneficiary designations. Start thinking about, long-term care, long-term health care, assisted living. What are my living arrangements going to be going forward if it's just me? Do I have adult children that can help take care of me? Or do I need to think about what that's going to look like on my own? Some of the things also is just, what type of charitable inclinations do you have? Do you want to set up some type of a memorial for your spouse? So all these types of things, it's not something it's going to even cross your mind probably in the first week or the first month. But as we transition through that first year and on, that's where some of these things might come into play, things you might want to do to remember that person as you move forward.
Yeah.
And again, I think the other thing is, you don't have to do everything now, as we talked about. One of the things that really, again, is the planning. The lack of planning prior to death is what often creates the urgency around some of these decisions that could otherwise potentially wait. So I think that's part of what you want to consider is if you are married now, what are the things that you should be doing to prepare in advance? Because again, we know that very unlikely that both spouses are going to pass at the exact same time. One or the other is going to be we'll call it a solo ager. So what is that? Can you do now to prepare to make life easier when that time comes?
I like that. Yeah.
Anything else you would add, Wendy, as far as anything you missed that I felt like I missed? Again, every situation is different. I think that's the thing to know is you're not right or wrong based on what you think is a priority. It's just whether those priorities force you into decisions sooner rather than later.
Yeah. I mean, I think you covered it well. It's just there are all kinds of issues that you may not even think of that could, make things more difficult or easier for you.
Well, and I think that's really why the guide is there, that we created the guide that we'll share. I'll talk about that in just a second. But that's really what that guide is for, is to give you a checklist of things that you might not otherwise think about. A lot of these things are going to be relatively obvious, but in an emotional time, you just might not think about them until it's too late. And that's really what we're trying to avoid is having to make quick decisions because you weren't aware of something. And so by having the checklist, having things that you can go, do I need to do this? Do I need to do that? And of course, the organizer that's in the back that's going to allow you to gather a lot of these important items, whether it's contact information for professionals that are in your life, doctors, CPAs, financial advisors, important documents. Where is all your stuff?
Mm-hmm.
Making sure that you have a place you can start gathering those. Again, whether you decide to gather those and put all that information together in advance, or if it's just someplace you can go after the fact, if you have lost a spouse and you're trying to just figure all this stuff out and get everything organized as you try to make the best of your life going forward.
Yep. Okay.
So just a quick summary. We'll run through some of the key bullet points that we talked about. So again, ideally avoid emotional decisions in that first 12 months, but you take action when it's needed. Again, understand your tax filing window in that first year, in the first calendar year. You should still have the opportunity to file married, filing jointly, whereas you're most likely going to file single in those years following. So you want to, if you can, act before that window closes, act before that end of year of death. Again, start rebuilding your financial foundation with updated goals and strategies that are specific to you, things that you want to accomplish. Make sure that you take time to properly evaluate your survivor benefits and your filing options there with Social Security. Reflect on where you want to live and how you want to live. What is that going to look like going forward? Where you want to be? What do you want to do? Who do you want to be with when you're doing those things? And then ideally, we're going to customize the next chapter of life with confidence, clarity, and support. You want people around you that can help get you through these times, these difficult times, whether it's family, close friends, or again, having professionals on your side of the table that can help you make some of these decisions or walk you through the information that you need to make an informed decision as well.
Yeah, making the most of the time that you have left for sure.
Absolutely. Well, excellent. Wendy, thank you again for joining me. Thank you to all of our listeners for spending time with us today. Again, just as a reminder, we're going to share the guide in our show notes for this episode. It's also going to be on our website. You can go to the simplyretirementpodcast.com. If you are in that first year of loss and you'd like help getting organized, getting those next steps in place, we are here to support you. You can visit getmysimplyretirementroadmap.com to review our Simply Retirement Roadmap process. This is our 3-step process to help you answer those big questions, those big retirement questions, and help you make an informed and educated decision about whether we are the right firm to help you navigate this journey. We want to make sure that we help clarify what's urgent, what's optional, and what will help you move forward with strength. That is it for today's episode. Again, for all the links and resources discussed, you can go to the simplyretirementpodcast.com. Hopefully you found this helpful. Please like, follow, and share this with a friend. Until next time, remember, retirement is not the end of the road. It's the start of a new journey.
That's it for today's episode of the Simply Retirement Podcast. We hope you found our insights and advice helpful in planning for a fulfilling retirement. Don't forget to take action on what you've learned today. Visit our website at blakewealthmanagement.com to learn more about our firm and review our Simply Retirement Roadmap process to get you on the right path to the retirement you deserve. And don't forget to click the follow button to be notified when new episodes become available. Thank you for joining us on this journey, and we look forward to helping you achieve your retirement goals. Remember, retirement is not the end of the road, it is the start of a new journey. So embrace it and make the most of it. Until next time, take care. Content here is for illustrative purposes and general information only. It is not legal, tax, or individualized financial advice, nor is it a recommendation to buy, sell, or hold any specific security, or engage in any specific trading strategy. Results will vary. Past performance is no indication of future results or success. Market conditions change continuously. This commentary reflects the personal opinions, viewpoints, and analyses of Blake Wealth Management. It does not necessarily represent those of RFG Advisory, their clients, or their employees. This commentary should not be regarded as a description of advisory services provided by Blake Wealth Management or RFG Advisory, or performance returns of any client. The views reflected in the commentary are subject to change at any time without notice. Advisory services offered by investment advisory representatives of RFG Advisory, a registered investment advisor, Blake Wealth Management, and RFG Advisory are unaffiliated entities. Advisory services are only offered to clients or prospective clients where RFG Advisory and its representatives are properly licensed or exempt from licensure. No advisory services may be rendered by RFG Advisory unless a client agreement is in place.